Hey, everybody, this is Joe Harris from Morgan Financial.
And Lindsay in Business Development.
Lindsay, what are we talking about today?
Here to talk about mortgage points.
Awesome.
Yeah. So first question, I guess, right out of the gate would be, what exactly is a mortgage point?
Great question. So there's two types of mortgage points. There's either discount points or origination points. And the points refers to 1 point is 1% of the loan amount. So if the loan amount's $100,000, the 1 point on that loan would cost $1,000, and this is paid up front at closing.
Okay. So you had mentioned discount and origination points. Can you explain a little bit more about that?
Okay, so let's talk about discount points. So a discount point is you're paying money up front to get a discount in the interest rate. So rule of thumb is that typically one discount point would get a reduction of about 0.25% in the interest rate. Now that fluctuates. Like right now, we're seeing 1 point get you more than that in some cases, and sometimes it's less. But right now, there is a good discount. You know, if you pay 1 point, you might get more than 0.25%. That's just a rule of thumb.
Okay.
And so,
well, what would some of the advantages of discount points be?
Great question. Advantage of the discount point is you're paying up front in return for a lower interest rate. So that interest rate, if it's a 30-year fixed rate loan, you're going to have that lower interest rate for the duration of the loan.
So how would that apply to somebody maybe that's, we're right next to Patrick Air Force Base, somebody that's going to be moving into the area, but they know they're only going to stay for a couple years versus somebody that's planning on living there for the next 15 to 20 years?
Well, that's a great question. If you know you're not going to be there very long, there's a simple math equation. I mean, we hear it all the time. I don't want to pay points. Well, this goes back to the old days where points were fees or junk fees to the lender and went to the lender's pocket. That's no longer the case. A true discount point is a true reduction of interest rate in exchange for an upfront fee. And so if you're going to be here short term, if you're going to save, let's say $50 a month, right? And that point costs you $1,000. Well, you got to be there at least 20 months for that to make sense.
Right.
If you're not there 20 months, don't pay. Or if it's a 3-year payback and you're going to be there 2 years, don't pay up front to reduce the rate unless you absolutely have to, and there's no way around it. But don't spend the money if you don't have to.
Right.
If you're going to be there long term, starts to make a lot more sense. Because if let's say it gives you a $50 reduction in payment every month, and you're going to be there for 10 years. Well, that's, 50 times 12 times 10 is the money you're going to save. And you just subtract out what it's going to cost you up front to know what you're really going to save over the life of that loan. Does that make sense?
It does. Now, are there any disadvantages to mortgage points or discount points, or is that based off of what loan officer you go to?
Well, typically it shouldn't matter the loan officer.
Okay.
Because the costs are the costs, right? So the disadvantage is you are paying money upfront at closing to pay for that point. And it could take time to recoup your initial investment. So you got to make sure you're going to be there long enough to recoup your initial investment. Okay.
So it sounds like just getting in front of somebody that can explain all of the options. It seems very situational if I'm hearing it correct.
It is, but rule of thumb, if you're not going to be in the property very long, discount points might not make a lot of sense for you.
Might not be for you.
Right.
Gotcha. Okay, so Joe, you also mentioned origination points.
Right.
Explain that a little bit to me.
Okay, origination points, every lender has fees in order to do the loan. I mean, I shouldn't say every lender. Most lenders have fees to do the loan. And origination points are fees that go to the lender in order to do the loan. They might be processing or underwriting. Some people lump them all together. Some people break them up and put them in different sections and try to hide them.
That's never good.
I've seen lots of things, but origination points in general are fees charged by the lender up front in order to do the loan.
So what are some of the, again, kind of the previous question, advantages and disadvantages of origination points?
Sure. Again, I always tell people you got to look at two things and you got to look at them together. You got to look at the fees the lender charges, whether they be origination or discount, and the rate you get at those fees. So some lenders might have higher origination fees, but they might have lower rates, right? Some lenders might have lower origination points, say, we have no lender fees. Yeah, but what do your rates look like? And I've seen both of these gimmicks out there. It comes down to options. Everyone in marketing, different lenders package up their options different ways and market them different ways. But at the end of the day, you got to look at those fees you're paying up front, origination or discount, and the rate you're getting and see if it makes sense for you. And so the disadvantages is that it could be additional closing costs at closing, and you got to make sure the fees make sense for the rate you're getting and how long you're going to be in the property.
So you just have to pay a little bit more up front for a benefit on the back end.
Correct. Yeah.
Gotcha. So when would you consider paying points? In what situations?
Again, people that say, I don't want to pay points don't make sense. Well, they can mathematically. It's a function of math, right?
Yeah.
All this stuff is a function of math.
And what equation best fits that consumer?
Right. And numbers can be put to this. If someone says, I'm going to be in my house 2 years, if you know you're going to be transferred in the next 2 to 3 years, if you know that you're going to buy a more house in the next couple of years, or buy downsize or upsize, depending on your family's growing or shrinking, your kids are going off to college, you might want to downsize. You might need to sell in a couple of years. Well, if you know that you're not going to be in the house that long, it doesn't always make sense to pay the points, right?
Right.
But if you know you're going to be there long term, this is your forever home, and even though people say, oh, the rates are going down or rates are going up, no one really knows. And to beat that uncertainty, take the best rate you can now. If you're going to be in there forever, you might never need to refinance, and save a ton of dough by doing that. If you pay points now, you might not need to refinance in a couple of years, and you're going to save yourself a lot of money in the long run.
And that's great advice.
Yep.
Awesome. Well, that's all I have for you today.
All right, cool. Well, look, if you got something out of this, please like and share it with someone that might be looking to buy a house or refinance a house, to help them understand what points are. And with that, we'll see you next time.
Bye, guys.